All right, welcome to another Futures Initiative Trading Recap. Tonight we have JM Dubster. Tonight we are going to be looking over Dubster's trades and his very colorful charts. So,
Oh yeah.
price action today was unidirectional. It went in one direction and did not leave that direction. So, Dubster, floor is yours. Take it away,
Awesome.
my man.
All right. So today was a very interesting day. We had a couple news come out, but nothing too heavy. I really want to talk about this specific section here. I went ahead and I traded NQ. However, on this specific section, when I charted on the pre-market section, I noticed that when New York opened, we really didn't come and grab London lows first. And I typically like to see London get taken out by New York if we're down here in this range, so we can target the buy side section. Normally, when this happens, we see like a market structure shift and a continuation for a bull run. And then at the end of the day, when London closes, I normally see it come back to opening gap. In this case today, I noticed that on New York, we never came down, right? And due to the fact that we never came down and grabbed the pre-market lows, we just took off. And this thing is just very special here. We have a liquidity void that I've been hunting for a couple days, or we've been hunting for a couple days now. And as you guys can see right here, this is the liquidity void. We finally got it. We took over it. And I went ahead and I took a trade up here to this specific section. So right here on this specific section here, let me go ahead and show you guys the settings. So you guys can see, let's go on. I took a trade here. I simply got on here on this specific area. I saw consolidation. Due to that consolidation there, I went ahead. I got out here very easily, very quickly. But then after noticing that it really wanted to take off, I noticed that price action really wanted the liquidity void, and we ended up hitting over 100 ticks on this trade. So this was just 3 micros, nothing too crazy. It was pre-market hours, about to hit 9 o'clock. So just due to the fact that we hit break of structure here, we came down. I didn't catch it, a consequent encroachment. So by the time we saw that it was a nice green candle, I went in with 3 micros. I didn't go in so heavy, put my stop loss below the previous candle, and we just rode it to the upside. So I thought this was just a really good trade. I just followed the trend, nothing too crazy. I knew my target was the liquidity void. I knew price action wanted this, and pretty much just we took it out. So this trade right here is just not something I am proud of. It's just the fact that I knew this was a target, so I just jumped in and didn't want to go in too heavy due to the fact that there was really no strategy behind here, right? Just that I had its target. So other than that, it was a good trade though, but that's pretty much what I have for this guy. And the reason why I'm talking about the liquidity void here is because I took something very important today regarding this section here. And when I was in this specific area, I noticed that price action was not going up higher. So due to the fact that it didn't go higher, and we just died with so much momentum at New York Open at 9:30, I noticed that price action just came down here, sell side liquidity. When it took a bounce from the upside, we pretty much came up here. We did an internal high, an internal low, just like a couple swings, intermediate swings, and we failed to grab this fair value gap here. I talked about this a couple days ago on the recap that I noticed that these fair value gaps, the breakaways, these are called like the fair value gaps breakaways, normally don't get tagged along, and when they don't, they're most likely gonna get rejected at the breaker candle. So something that I missed today, and I want to just keep on looking into this, is that whenever we have these specific swings here, after the third or second swing, we normally reject off the breaker candle, and we do not balance this guy out, and this guy gets left behind for another time. So this was just something very important that I'm going to keep in mind and continue to keep tracking it down. I forget about this when I'm trading. I'm so focused looking for the market structure shift that I miss it. So based on the market structure shift strategy that we use, we have a break of structure at the bottom. We have a market structure shift here. Due to that, I know that this guy right here is a valid fair value gap for one more downside, momentum. So at this position here, we know that we would like to take a short position. Stop loss is always a couple ticks above the fair value gap candle. And as you guys can see, this stop loss right here would be about 135 tick stop loss due to the strategy I played. So in this case, even though it was a profitable trade, and for the rest of the day, we just continued dying, I did not take this entry here. And I did not take it here because I did not want to risk 135 ticks. So I moved on to ES and took the same entry point. But on this specific section, what do we have here? We had a break of structure, a market structure shift up here, break of structure here, all fair value gap, and entry was a consequent encroachment. And I'll show you guys that I entered on this specific location. So we go here, go executions, and if you look, 4584.75 was actually the highest part of this candle. So we pretty much sniped this entry. We never saw red, and it just continued dying throughout the whole time. However, I ran out of trims. I do not know how to trim with ES. So I went for 10 ticks, then I went for 20, I went for 30, I ended up at 50, I ended up at 70 ticks or 80 ticks, somewhere over here. So I ended up running out of contracts at that point, and unfortunately, I didn't catch the full trend. But I love this entry here. It is the strategy that I look for every day. So I only took one trade here on ES, and I took one trade during pre-market hours. Stop loss was about 18 ticks. Profit, I was aiming for 34 ticks in the beginning, but I went ahead and I trimmed. As soon as I trimmed my second contract, I moved my stop loss to break even. But as you guys can see, price action never came back to break even. I never got wicked out. And next thing you know, I just continued dying. And something about this position here is, throughout this whole time, I got in at the very, very beginning of this chop. This thing chopped for 45 minutes before it actually died. So throughout this whole time, it was a patience game, you know? We had to be calm. We couldn't ignore the fact that this team was going green. It was going back to break even, pretty much almost close to break even, kept going back where we wanted to and continue against us. So you can see that I trimmed here, I trimmed here. So it was 10, 20, 30. So even though they're very close to each other, it is quite a bit few ticks. Ended up trimming down here as well. But throughout this whole time, it did take forever. I was just holding my contracts up here, break even, and it was nuts, you know. But we stayed calm. This was a live call today. It wasn't too bad. So I was really excited about this trade. I did take one more trade, and I believe this was on crude oil. Yes. This guy right here, dropped down to the 1 minute, and I got lucky on this one, honestly. I understood why I got in here, but it was luck. So I got in here before news came out. I got in here in this specific section here. There is a fair value gap here. As soon as we saw this rejection, I jumped in on this candle, and we took profits here, got in with 1 mini. We took profits here at about 20 ticks or so. And luckily for me, I called it good, because after that, we died with so much momentum. And unfortunately, I was on the wrong side, right? But it was a good trade overall. We got over 20 ticks on a mini, so it was over 200 bucks, nothing too shabby. So pretty good trade. Entry point was at the fair value gap off of this 1 minute, and I just kind of pretty much scalped it to the top, got out, got happy with that, and then we continued dying after that.
Very nice, very nice. Yes, I too enjoy trading crude. It is a lot of fun. It also is the one future that when it moves everything out of its way. It is going.
Yeah.
So fantastic trade, especially on NQ. Awesome to see those trades, and awesome to see, you know what, you even went out of your comfort zone with gold and NQ and ES to now trading oil, getting more familiar with ES. So that's fantastic, and the strategy works the same on all of them.
Yes, pretty much. I mean, I still have a lot of back testing to do on crude oil, but meanwhile, It seems to like work somewhat. I haven't really tested it. I haven't really focused enough to know. It's like, hey, like, get in here for this specific reason. So
Right.
at this very moment, I'm sticking to ES and NQ with saying that this strategy is profitable here. But that's all I can say really, because I haven't really backtested crude oil enough to say that it actually works there. But
Sure.
as of right now, we've been very consistent. I mean, I took one trade during New York session and I took 2 trades on pre-market hours. So one trade on this session, I think that's more than enough. It was 5 micros over $300 in 5 micros. That's insane. So in reality, that's more than I can ask for.
Exactly. Exactly. You know what? You can't ask for much more than that. Truthfully,
Yep.
those are some fantastic trades. So, how did you feel trading oil?
Um, dude, I wasn't even looking at the chart. So I have traded before, but whenever I trade, um, and you guys, I didn't record to this live, but I actually walked away. So I don't watch my trades. When I'm inside a trade, if I'm in there, I'm normally say when I was in crude oil, I was actually with Jay at the time. I told him I got in calls, and then we were looking at NQ for the upside. And this whole time we were concentrating on this entry here. And then he had taken long somewhere down here. So I don't really care much for when I'm inside a trade. I normally have my stop loss, I have my TP, and that's pretty much it. So my emotions don't really kick in when I'm inside a trade because either I wait for a stop loss to get hit and I get order filled in the background or something, or I see a notification. So that's just something that I tend to do because normally when I'm looking at this, I if I'm looking at it, I if I don't follow my rules, I'm gonna trim, right? That's the reason why I have so many strict rules, so I can follow them. So instead, stay away from the market, stay away from looking at the chart, and forget about the trade. And I actually do forget about the trade because normally I'm going back and forth between accounts, and sometimes I forget to log in back to an account that I'm inside the trade, and next thing you know, either I got stopped out or I'm actually in huge profits because I never trimmed once.
Yep,
So,
that'll happen. That'll
yeah.
most definitely happen.
Yeah, so one thing I do is all my back testing, everything that I've done always has a 2-to-1 ratio. And
Yep.
the reason why I do it like that is because I want to make sure that whenever my back testing was done, 2-to-1 ratio got hit. So if I'm gonna walk away, all I have to do is make sure I put the chart 2-to-1 ratio, put my stop loss where it belongs, put my TP where it belongs. If I got stopped out, that means it was just unlucky. If I didn't get stopped out, then it's obviously gonna be a profit or win. So I came back to this trade here, but if I would have never came back, I would have ended up winning this trade at a very 281 ticks, right? So in the end of the day, trust the strategy, trust your analysis. If it works, it works. If it doesn't, go back, look at it pretty much and see what the hell's going on, right? And that's just something I can say because I pretty much at this time when I'm trading, I take the kids to school. So if I'm inside a trade, I walk away. So it doesn't really matter at the end of the day.
Right. Absolutely. Absolutely, man. And sometimes that's just how it goes. Like that's what you have to do sometimes to keep your mental right.
Yep, pretty much.
So I totally get that and understand it. So no worries from me there. All right. It's my turn.
I actually have a quick question while you're setting up your
Yeah.
screen. So since you're so like you have a lot of rules when you're trading, right?
Mm-hmm.
So how many, I guess, how many like entry strategies like specific do you have?
I
Like,
have
is it just
three.
mostly one or oh, okay.
Three strategies. I play so I have a strategy on one account that I only play off the 1 hour.
Okay.
Specifically off the 1 hour. So let's say for example we go on NQ and say we choose a random day. So we choose right here, this section right here. So on this specific strategy, I look for the highest point and I have to make sure that this 1 hour has a fair value gap. So we know that this candle is the highest point here, right? If that
Mhm.
candle has a fair value gap, which in this case it does not, this is not a healthy order block for me. So I go back and I look for another high point. So let's say, for example, this guy is the highest candle, this green one. This guy
Mhm.
here does not have a fair value gap, so this is not a healthy order block. So these are terrible. But that's pretty much literally what I do. Okay, right here. So what do we have? The highest point of this candle. We have a very tiny fair value gap here, but I don't think this one gets played anytime soon. Right here, we have a fair value gap right there. And let's go ahead and see if this one's been played. Yeah, this guy did get played and I took a loss here, right? So what I do is, on this specific area right here, this is a news candle and I remember this day. I would have never taken this trade. But normally what I do is, consequent encroachment is my entry and my stop loss is a couple ticks above Wicks candle. And this is a 1 hour play. So the reason why I trade with micros is because this is actually the first strategy that I started with. And I had so much backtest on this that this strategy has actually been very, very good to me. So what I do is consequent encroachment at this candle. I enter 2 positions. So at total contracts will always be a total loss of $200. So it does not matter how many stop loss, how many ticks it is. I follow the rule where the stop loss is above the 1 hour healthy order block candles wick. So if it's 100 ticks, I make sure that my portion size, it's enough to be 250 at 100 ticks. So at the end of the day, I will always lose the same amount regarding if it's a 300 tick stop loss or a 20 tick stop loss. Right. So the rule is a couple ticks above the 1 hour candle, and then as soon as it hits a consequent encroachment, 2-to-1 ratio. Rules are simple, they're the same. Every single entry was the same, right? So obviously that was a loss, but you do not take those fucking trades whenever those are candle ones. Whenever they're news candles. Right here, what do we have? The highest point of this mountain. We had a dip, came back up, retracement. Then we had a order block here. So I would have taken this trade as well. What we do is we have a 1 hour healthy order block. I move it to the side. Entry point is at consequent encroachment. So I would have shorted here. I would have put my stop loss on top of here, and I would have put a 2-to-1 ratio. However, the reason why I made pretty good profits off of this strategy is because since it is on the 1 hour time frame, these take a while to form. So it's always a 2-to-1 profit. I started trimming at 50 ticks due to this strategy. What do we have here? 239 ticks. So let's say, for example, I got in with 200. Let's say I got in with 6 contracts. I trim 1 at 50, another set 2 at 100, and then another set at 150, and then 250, and I just let my runners run. So at this point, when I was in with 6 micros, I was able to cash out $600 to $700 at time due to these drops. So this was just one of the strategies. And there's a bunch of rules that I have behind here, but just like to simplify things, 1 hour has to have a fair value gap. If it does not have a fair value gap, I do not play it. You enter a consequent encroachment, and then you start narrowing it down on the 5 minutes. But this is one of the rules. My other strategy is the market structure shift. As you know, pretty much I wait for the market structure shift to make sure that one got rated, buy side got rated, then I look for shorts. If sell side got rated, then I look for highs. And the second strategy that I look for is actually off the 5 minutes as well. What I look for on the 5 minutes, I look for the final. So let's say, for example, on this specific section, off of this specific section, we know that this was the dump that caused the break of structure and a massive break of structure down here, right? Due to that, I pay attention to these fair value gaps up here. So we most likely possibly have a fair value gap around this specific section on the 50-minute, and this might be probably a 50-minute or 1 hour. Due to that reason, I know that this guy right here is more of a sniper entry due to the fact that we have a confluence down here. So what I do is I wait for the final fair value gap to get hit, and I would go ahead and short it. And this specific section, I think this was yesterday or something, but we did short it here, and this is the one that stopped me out. I believe this was yesterday. We talked about this guy. Stopped out because my rule on these guys are the fair value gaps candles a couple ticks above it. So right around right here, somewhere around there. If I remember correctly, I got stopped out. Yep, this is a trade I got stopped out. So this is the strategy. I look for the final fair value gaps either on the buy side or the sell side liquidity. And I look for 2-to-1 ratio as well. Always 2-to-1 ratio. And then when they take off, if you see momentum, you obviously don't trim and you just let them run. And that's pretty much what, like, for example, same thing here. We know that this guy, this pump, was the one that broke structure. We broke structure right here. What do? We have a final fair value gap here. And pretty much the same thing, took off. So that's all I do. And then that's the reason why you'll see, for example, today, I think it's on ES. What do we have here? We have a fair value gap on this specific section, right? Due to that section, we have a final fair value gap here. So what am I waiting for? I'm waiting for longs. So this is just a different strategy that I use. There's always a high chance that this thing rejects. So I'm literally just stay patient and I will not enter trade until this guy comes down here, wicks me in, and then continues to the upside. But this is just a different strategy, a completely different strategy than a market structure shift or the healthy order block.
Gotcha.
And they all have different rules, but they all have stop loss. But they do have different rules among each other.
Okay.
So it's good to have several setups in your repertoire just so that you can have a sense of confluence among them, but you can also have different sets of rules that you are willing to play by.
Yep. Then
Yeah.
I'll show you right here. There's something very important in this specific area. What do we have down here? We have a fair value gap down here, right? Why is this guy important? This guy is very important because it's the final one from this pump, but at the same time, I'm expecting it to go down there or chop before because of this guy. So let's say, for example, ES comes down to this final one, and then we have NQ currently at a fair value gap here, but we are currently on a 15-minute fair value gap, which means this guy is possibly stronger. There's a higher chance of rejection here due to it being a 15-minute rather than the 5-minute. However, if I take a loss here, I will still enter on this specific section and I'll put my stop loss down here due to the fact that this is a final fair value gap. And at the same time, I'm expecting ES to go ahead and chop around this specific area before it takes off. However, if I do lose this trade, obviously we have something very important here and I will not take this to the upside. I'll just look for a market structure shift. But they're just like, I look for a different confluence and I play between ES and NQ and I always look for the divergence. That's how these strategies pretty much play. Either if it's a market structure shift, a healthy order block, or the final fair value gap, I use ES and NQ as a confluence. So I can like always explain it to you, but in reality, just because I explain you the strategy doesn't mean that you're actually going to go ahead and look at what's going on NQ when I'm also looking at ES at the same time, right? So that's kind of like the difficult part about the strategies that I use.
Okay. I mean, that makes sense. I was just wondering though, because like I watched ICT, the mentorship, and so I'm familiar with trading with fair value gap. Obviously, you guys have got it down a lot better than I have, so I've kind of started adopting that outlook on them. But I also have another entry that has absolutely nothing to do with fair value gap. So that's why I was just wondering, is it normal to have more than one type of like entry rule?
Oh yeah. Oh yeah. Oh man. So if you ever wonder why I'm not posting my charts all over, because I'll have 3 or 4 different entries and targets on either side. And when you start down that road, it gets nuts. So, for example, I'll go ahead and share my screen. Right. So, this is what my target for tonight, London, what have you. So, we'll go ahead and come back and check on that later. But as you know, I woke up late today and missed this entire move. Okay. But given that I missed this entire move, my thought was, okay, let's go ahead and find the breaker, which I was explaining to Wesley earlier. I said, hey, let's look at that breaker right here. And that was my entry to the downside. So I took this with 5 minis straight down. Is that 73? Yeah. That was an absolutely ridiculous trade. But this was my target down here. I took it off about right here. Why? Because I needed to take profit. I didn't want to get greedy. And because this is a very likely zone to retrace. Why is that? Because we've already come down to the consequent encroachment of this 1 hour fair value gap, meaning even if we had a immediate rebalance here, this zone could act as a major support to the upside. Whereas we could bounce here and shoot up even higher, straight through the tops of the relatively equal highs. So because that was such a possibility, I thought, you know what? I'm gonna get out here and let it run. And we saw the liquidation, and that's what I said, okay, you know what? We have a liquidation. I really would like for it to come back down to consequent encroachment of this wick. It did not, which means we have a lot of momentum coming back. So you can also look at it as we hit the fair value, the top of the fair value gap right here. And that is where I got out. But if you really wanted to be snazzy, could have taken it at the breaker right here. Would have taken you straight to the downside, which is what I ended up doing. So played back to back to back. And after that, came back into Futures Initiative to go live after taking $8,000 or $8,500 profit in a handful of trades. So these mitigation blocks and breaker candles are extremely important. Why? Because they are the guideline for getting wicked in and seeing little to no red. But they're tricky because you could have gotten wicked in here, or fell all the way down. So it is very tricky. This one I was very comfortable with because it was the only time we came back after having the fair value gap. So I did not have a lot of heartache on that one. But some like this one, yeah, quite a bit. After that, I turned off my accounts, said I wasn't going to trade on my accounts anymore, and began paper trading. That's when the real carnage happened. We took a lot of losses there because I was not expecting this to continue down after taking out the 1 hour fair value gap. I actually expected the 1 hour fair value gap to act as support. Unfortunately, that did not happen. Instead, it acted as resistance. Therefore, I do expect us to come back through the top of it to retrace. Let me go ahead and go on the 1 hour before coming back down. But it is very interesting if you were to look at where we currently are. Right at the golden pocket. So that does indicate to us that, hey, we might just be on the downtrend. Yeah. So given such things, I believe that we will probably come back up way up here before we come all the way back down and through this fair value gap, through the weekly fair value gap. Given that tomorrow's Thursday, perfect. Allow for a run up during London to come back up, retrace a bit. We get a sharp peak in New York, drop off, and then Asia and London can retrace all the way down. Hence Friday, we then get a small retracement back and then go through the weekly fair value gap. So all things are possible. It is just time to see what is going to happen. So very eager to see where price goes, see what we do. But those were my trades, and normally I do enjoy playing off the inverse fair value gap, meaning you create the fair value gap, and then you retrace back to the top of the fair value gap or the bottom, depending on which way you're wanting price to go.
Mhm.
And that is one of my main entries. The other is liquidation candles. And Dubster can attest to it. I seek those out like no other.
Yeah.
Same with volume imbalances and small liquidity voids. Places where you would be like, there's no way it's going to go find the extra 2 bars. Now price will find it. And then run so fast back the other way, it'll only leave behind a wick and just be gone. So
Okay.
things like that are what I like to target. And could I use a 1 minute chart? Absolutely, but I choose not to. To me, that's too messy. I prefer the 5 minute just because it gives a clearer picture. It allows us to really see what's going on. And if we are wanting to see a bit more retracement, we have small fair value gaps right up here, volume balance here, another fair value gap here. So we have a lot of room for retracement up. It's, are we going to take it or not?
Mhm.
So we shall see. I wanted to trade oil today, but I wanted to keep it light. Understanding the past few days, I have been trading very heavily. So I need to take a step back, get myself off of tilt, and come back and approach this with a fresh pair of eyes. So those are my trades of today.
Not bad. Yeah, you didn't go as crazy as usual.
Right.
Yeah. That's
Oh,
funny.
albeit though the 5 minis is a little crazy.
I mean, don't get me wrong, it's nice, but damn. You know,
Strive to be like you one day, as cool as you are.
right? That's what we're trying to be.
Shit, man. I took the brute force route of I'm gonna learn how to trade with a lot of minis off the bat. I'm gonna do it so much that I become numb to it. And
It paying
then
off.
what?
It's paying off.
Finally, after
How long
many,
has it
many
been?
moons and many, 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 many blown accounts.
Jeez.
And herein lies the reason why I don't trade 50K accounts.
Because you would blow it up too fast.
I would blow that shit up in about half a second. Because
And I did 2 back to back 2 weeks
what's
ago.
up?
I said I did blow 2 back to back, 2 weeks ago?
It happens.
Jesus.
Like
You went in
within
heavy, I'm
like,
assuming.
I mean, it's not that I went in super heavy. It's just that I went in over and over and over again.
Oh, he found that reverse button.
And no, it was not the
Oh.
reverse button. No, it was this is the entry. Okay, I drove down too far. No, it's this one. But I was also trading NQ with like a 10 tick stop.
Oh,
I
yeah,
see.
those commissions are gonna rack up real quick.
That's what did it.
Ah, yeah, yeah, that'll happen.
But
So
yeah,
where?
I went through about an hour and a half.
Yeah, if I'm taking heavy losses on the day, I'll usually quit. Monday, I should have just walked away. I'm glad I didn't, but I should have. Under any other circumstance, I should have walked and not looked back.
Did you start off negative on Monday?
Yes, because I made the very intelligent move to start a trade off on Tradeovate and try to manage it on TradingView when I had multiple accounts linked together in Tradeovate. So my stop loss disappeared for one of them and stayed
Gee.
for the other one. So I woke up missing around $4,000.
Ouch.
Yeah. And then as you saw the first two trades they took, bad. So I went down about 5.5, 6,000.
Jesus.
On second thought, I don't know if I want to be as cool as you. That hurt. That hurt me.
That was the one and only time I have done that. Um, any other time besides that, I will walk away. I will walk. Because I understand that if I go on tilt on a PA account, I will burn it. So I always, no matter what, try to have at least one evaluation account working so that when in case I do go on tilt, I can trade that.
And is that like you saying you're just gonna trade just because? Or like revenge trade, I guess?
Yeah, pretty much. I took my punching bag.
Very well.
On an eval account.
I mean, it's better than a funded account.
Bro, if I burnt my funded account now, I would probably cry and go live in a cave.
Why? Is it just that high over whatever they funded it?
Kind of.
Okay, that makes sense then.
It's not a lot, but it's enough that I would lose some sleep over.
Ooh, I'd lose sleep over a couple $100 right now.
Yeah, it's around that.
Well, I mean, I did kind of piss myself off. So when I redid my challenge after blowing it last week, I went to take profit and went through the process of signing up for another account. I was like, where the fuck am I supposed to put this promo code in? Not realizing it was back on the first screen. I was like, okay, it's probably on the next screen. And so I paid $170 instead of using the 50% off promo code. So
Welcome to my world.
Ain't that about a bitch? Oh yeah,
I was so pissed.
yeah. But Dubs, you have a fantastic story about that.
Yeah, I paid full pop. And that, funny enough, it's my funded account right now.
It's funny because I think
That
this
was
is
my
probably
first
the
funded
one,
account. And I
the
haven't
one with
blown
big
it.
bull price.
That's funny.
But yeah, that's actually became my first funded account.
Remember
Yeah, following you, but
we were talking about it, and you said, "I swear to God, if I blow this account, because
Yep.
of that fee, you were just like, oh hell no."
oh my god, I do have to pay 170 fee for it again, don't
Yep. So you either blow it up or you pass that shit before subscription, because I recommend you blow it up
I
or you
recommend you
pass.
blow it up.
You pass or
the
you
day
blow
before,
up.
the day
Yeah.
before it renews.
Yep. And after that, if you blow it up, you cancel that shit. If you pass, then I'd rather just pay the fee to pass than fucking cancel it. And yeah, you were gonna pay the same
Funny,
anyways.
but I got 3 weeks. But yeah, Chris gave me a little pep talk and told me to shape the fuck up because I was about $100 away from blowing that account
Jesus.
yesterday, or 200
Oh,
away from
you
blowing
came
it
up
yesterday.
today then.
Yeah, yeah. But I also was not because yesterday I was extremely aggressive with gold. It was bad. Like I was shooting dice with that motherfucker. He kept getting snake eyes.
We're just like, look, I'm gonna do this one way or another, and you're either on board or off the fucking ship.
It's pretty much how I felt.
Yep.
I'm gonna slow down now because I know my problems with trading. One of them is I get in way too aggressive a lot of the time, and that's because I think I got a slight case of FOMO. So I know that's my problem, so I'm gonna correct that one.
Well, that's why
It-
we spend so much time to go through the charts. That's how we spend so much time going through the the analysis, is so that in case that happens, we can, move on. Like, so we don't FOMO, because we're always waiting for one of our positions to get hit. And even if we see price run away, we walk away.
yeah, I've gotten better about that in the last week. That $170 on the line, that'll open your eyes a little bit.
Oh yeah. Oh yeah. But
Patience, honestly.
exactly.
Like a lot of us take a lot of trades, but not necessarily necessary. I mean, I took one New York trade today and then two pre-market, but the pre-market one 3 micros, and I did go in with a mini on the other one. But I try to look for one specific setup on New York. If I don't find it, I don't take anything else.
Nothing wrong
You
with
know
that
what's
at
weird?
all.
Mm-mm.
I used to always do better on free market, and then I went through like a little 2 week thing where I just didn't hit free market at all. So I don't know. Maybe I just went through a rut. And then that after lunch, the after lunch hour, like around 1:10,
Mm-hmm.
it was like 2 weeks straight where I did not miss a single trade in that time frame.
Damn.
Yeah. But I didn't trade every single day. I think I traded maybe 8 out of the 10 trading days. But that was on my Forex. Okay.
Oh, okay. Forex. Oh, that's true. You came from Forex.
Yep.
Mhm. That's why I said today was my biggest futures trade. Now I got to try to beat my biggest Forex. Well, eventually I'll beat my biggest Forex trade on futures, which was like 1,400.
What's
Mm.
your biggest Forex trade then?
Yeah, it was 1,400.
Fuck yeah. All right. Let's make sure you have
That's
the right foundation to then just smash it.
Yeah, that was before I stopped trading though, because I had a bunch of money in my bank. Like I thought I was rich, I had like 12,000, and I didn't work, and I was just traveling around, and then burnt through pretty fucking quick. And just I don't know why I didn't get back into trading until damn year, yeah, about a year later.
Yeah, that money goes real quick.
Yeah, especially when you're like me and you like nice things.
You like the finer things in life?
I do, I do.
Yeah. So now it's about building the bank to feed that lifestyle, not not
At
not
the
the other way
moment,
around.
at the moment, it's about getting next year set up so that I can buy another house in the summer, so that I have somewhere to put my family. So I'm not allowed to play games anymore.
See? So you know you have a reason to get back into trading, but also
That's why I started.
yep,
She said,
and
"Oh,
also
pregnant."
uh, a reason to not go and burn shit left and right.
Yeah, I still want to buy a new car though, in the next couple months. So I need to get good with this so that I can do that.
Yeah,
I want an SUV, I got a sedan right now, but with the baby, I want an SUV.
I'm gonna tell you, the SUVs are nice. I do enjoy them.
I'm gonna wait until the new Crown SUV comes out, Toyota. I'm gonna get that. It comes out this summer.
All right, so now you're on a deadline.
No, no, I wouldn't say a deadline because that'll make me rush things. I wouldn't say a deadline. I say I have a goal. Either way, I'm
Uh,
gonna be able to buy the house by, or I'm gonna be able to get the house by this summer. But I want to be able to get the car also. But for me to get the car, I need to at least have half of it set aside to put down on it, if not the whole thing.
if I may ask, why would you pay full for a depreciating asset?
That's because I don't like monthly bills.
Right, but how can
I
you?
have so with me, I have a little bit of money coming in from a bunch of different places. And so in my head, for me to make those little bit of monies from other bunch of different places into a good amount of monies coming from a bunch of different places, I need a larger pool of capital to invest into those places. And plus, my goal is to within the next, I don't know, maybe a couple of years to have $1 million dividend portfolio.
Okay,
Within the next like 530.
that's what it is. Okay, that's what it is. All right, yep. So you're very heavily invested in high yield stocks. Got it.
No, not high yield stocks. I actually
Those
don't have any
those
stock.
return the dividends unless you have an absolute shit ton of bonds that were able to get
I was
cashed.
I was gonna shoot for ETFs. There was a couple of them that I was looking at.
Absolutely. Just make sure market conditions are ripe, or else you'll burn through the entire portfolio in 6 months.
Really?
Yeah. Everything happens. So in ETFs, let's say you want to go and invest in SPY, right? So
Mhm.
traditionally, the S&P is supposed to return about 6 to 7% a year. Yeah, it hasn't done that in several. Most people have actually been down on their 401ks and retirement funds since the beginning of the year and have not recovered.
Okay.
So, but also you have to be careful of the rebalancing of ETFs. Who is rebalancing it? What are they rebalancing it with? What's making an an exit and what is entering. Because that percentage makeup of the ETF is going to make or break your gains.
So then, do you think it would be smarter or more safe to invest in like the dividend king stocks instead?
No, because those are quickly losing value, and we're coming to a point where a lot of firms cannot pay out dividends as they wish. They're not flush with cash. They're flush with debt.
Very true.
So recurring debt too. So it doesn't look as bad, but when dispersed and coming to earnings, they pass off under different names. But it's the same thing. It's revolving debt that they can't keep and they can't seem to buy more of.
So
Because
then,
buying debt using revolving debt offers a lot of tax benefits.
yeah, that was part of the plan I was going to use if I decided to get into real estate. Maybe.
Yeah, could work.
Yeah, but that's kind of involved. It's not really something that interests me. So that was kind of like the farther down the list.
Yeah, why not?
Because I obviously haven't done enough research yet, just because I'm not even close to that point, so I don't want to put something else on my plate. But I kind of wanted a very, a sizable stock portfolio, a sizable coin portfolio, just because you never know kind of how coins are going to go one way or the other.
Mhm.
Recently, I've kind of played with the idea of maybe buying bricks, but I don't know how real that is, so I might just invest a little bit in that.
Sure. So, like in the BRICS countries or like gold bricks?
No, the bricks, like the bricks currency.
Oh, hell no. You're gonna go bankrupt.
Well, that's why I said I didn't know how real it was, so I was just gonna put a little bit of
No,
money
no,
in.
no, 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 no. I mean, it's very real, but you can go bankrupt. Look at all the countries that are participating. They're all declining or third world economies. None of their currencies are in the top 10.
Yeah, I thought that's why they were doing it because they were trying to convert a bunch of countries to have a new centralized uh, currency to take over the dollar, as the people were talking about.
They're not going to take over the dollar, and I'll tell you why.
I didn't think that was going
Because
to happen at all, but
no, look. I mean, the dollar is the reserve currency anywhere in the world. Anywhere. I don't care if the pound is stronger than the dollar or the euro or the Swiss franc. Does not matter. The US dollar is the world reserve currency. And all these other countries can make all these political statements and stunts and say, we don't want the dollar. Okay, sure. When they need something, they're gonna use dollars. Like if what continues to happens, Europe takes a horrible spill, the euro declines, allowing the dollar to become more valuable. If you look at the dollar, it is currently becoming more and more valuable.
mhm.
So these third world countries are not going to overtake the dollar. Their economies are not even that of a single US state. So,
I didn't think it would take over. I just thought that it could be a decent investment,
but what
especially if more and more countries
are
hop onto it.
are you investing in countries that have a very bleak future?
No, that's why I said I need to do more research because I don't know
Yeah.
enough about
I would definitely do your research on it. You know, I've heard a lot of people say, oh, it'd be a great investment opportunity, but it depends on how you look at it.
That's all I looked at it as. I didn't think of it as something that, oh, well, this is like a contingency plan if the dollar drop. I don't think that's ever gonna
Right.
happen. I think the only other currency I would actually invest any kind of cash into is, if I could, probably the Swiss franc, because I'm pretty sure, if I'm not mistaken, that's like that's where the centralized banking uh thing is, right? What's it called?
Yes. So in Geneva,
Yeah.
yeah, in Zurich. So yes and no. Their laws are changing.
Really?
Hmm.
Hmm.
I'm not saying that they're not still the premier place to bank, but I'm saying I would definitely do your research before starting to put money there.
Well, this is just kind of part of my 5-year plan stuff. I'm not really super worried about any of that until I get my business going where I'm making a livable income, and I get my trading to the point where even when I'm having bad days, I'm still making money overall, because I'm not
Sure.
back to that point yet. Because I did live off of it for like 10 months, but I'm not back to that point yet. And I was
Look,
also doing
I'm
trading.
I'm very intrigued on where all this goes, man. Not, and I truly hope it all works out for you.
I'll give you guys an invite too, because when I buy my island, you guys can come anytime.
I appreciate it,
And
man.
I'm being very serious. So my
Now we're
wife's actually
talking.
from the Philippines, and she was telling me that they have islands out there. I mean, they're barren islands, obviously, but you can buy islands out in the Philippines, like, for a decent size. What she said, for like 100, 200, 400,000. I was like, yeah, we're definitely buying an island. The only regrettable thing is she said they're not long enough to put a landing strip on. So even if I did get a private jet at some point, that's just being very optimistic. But even if I did get a private jet, I wouldn't be able to land it on the island.
That's just sad, man.
But she said we could always helicopter over.
Yeah, a solution.
Yes.
But for the trading recap, do y'all have any questions or concerns?
Definitely forgot we were doing that. Oh, I did. You said, one of you said something about a divergence.
Mm-hmm.
What is that?
Want to go ahead and take it, Dubster?
Nah, you got this one, I think. Because I use divergence completely different. Oh,
I think you might have been the one who said it.
yeah, I'm the one that said it for sure. So the difference. Okay, let's see. Because I don't know exactly how to explain it, but I know there's always a divergence. So that's why fantastic. I think you should explain what it means, and then I can probably show you what I look for based on that, on those results.
Sure. So divergence is where NQ and ES do not align. So when they
Okay.
don't align,
So like they're not going in the same direction, or their swings are different.
yeah. So like QQQ and SPY are supposed to follow each other.
Mhm.
But when they don't, that's divergence.
I'll show you an example. I'm looking for one right now.
Okay.
It's pretty much like earlier when I was talking about how there's a 15-minute for rally gap where NQ was at, but I still wanted ES to go lower to that final for rally gap. I expect NQ to chop around that area, and while ES still continues to drop. So that would be a divergence among them. But I'm trying to find just a little quick. I know there's a nasty divergence today, so I'm gonna go ahead and show you that example that happened today. Fair position. Let me go ahead and stream this. And then going to NASDAQ. Okay. So if you pay attention to this specific area here,
Mhm.
we have this guy going on the uptrend, right? So on this section here, when we're on this uptrend here on NQ, the strategy here was to enter at consequent encroachment to the downside, right? That was a strategy. So we're gonna go ahead and place this guy. Stop loss would have been here, and target is break of structure. So pay attention to how this is working to the upside. If you look at NQ at that specific time, you see how this guy was instead going to the downside.
Yeah.
It was failing to go higher, which means that the only thing that NQ was doing at this time, it had to go back up and it had to balance out the fair value gap that it left behind. But throughout that time, ES didn't want to tag along. So ES was just chopping, waiting for NQ to do its job before it died. So that's the divergence we had today. NQ was going to the upside, showing that it wanted some upward movement, while ES was going to the downside, showing that it wanted some downward movement. So at that point, before one of them takes off, you normally wait for either or to do what it has to do on top, and then they both tag along in the same direction. So in this case, it ended up dying. They pretty much died 11:15, and if you look at this, at 11:15, they both started dying at the same time. However, they start doing the divergence beforehand, and then once they're ready to die, they will tag along and follow each other again. So that's pretty much what I look for. I look for this confluence here. Whenever sometimes I'm looking, let's say, for example, there was a fair value gap here, and ES was already a consequent encroachment, but on NQ, the fair value gap was down here, and NQ was right here. If I know that ES is at consequent encroachment to the upside, I will not wait for NQ to make it to consequent encroachment. And the reason why I don't do that sometimes is because I already know that ES wants to go ahead and take off already, and it had a strong candle. So at that point, if ES is all the way up here on this specific section, it would ignore the fair value gap, and then it would just tag along with ES if ES is strong. So there won't be a divergence there. But the difference here is that NQ never made it to the fair value gap, and ES did. So that's your confluence there. So that's how I use them one back and forth. But the divergence here would be that ES would do something different while NQ is doing the complete opposite. And they normally chop until they're both ready, and then they take off in either direction. And there's very slight times where one is going up and the other one's going down. Like I've seen it happen, but it's very, very rare.
Okay. That makes a lot of sense. Okay, I understand.
Mm-hmm. So you would have heard it. I think you got off during that time because you got off around 8 or 9. But yeah, this Mango and I were talking about is like the crazy divergence. We kept saying that over and over because I was in shorts here and Mango was in longs on NQ, and you could see why, because this one's showing me that it wants to reject, and I was bearish. But on Mango's screen, it was showing her that there is an uptrend here going on to the upside. So when she got this massive green candle, she was ready to go in long, so she got in longs. It ended up stopping her afterwards. But throughout this whole time, I was in shorts here to the downside, and NQ was showing upwards momentum. So that right there is the divergence we had. So she was in longs because of that divergence, and I was in shorts because of that. So it could have been a 50-50 in the end, right? But obviously the market wanted more downside rather than the upside.
Okay.
So, but yeah, that's pretty much what I mean. I use it a bit different, dude. I use it literally based to enter my strategies, like to enter my entries. If one of them is a consequent encroachment, I'll just take the one that's a consequent encroachment. Simple as that. If it needs to wait for NQ to grab the fair value gap, it normally chops and then it takes off where it's supposed to be.
Okay. It's good to me.
Mm-hmm.
Yeah. So that's kind of what divergence is, and it can help you to either enter in trades, to get out of trades, to find direction of price. But any other questions, comments, concerns?
No, another very informative poll.
Awesome. Awesome. Well, with that being said, y'all, I'll go ahead and call it. I appreciate everyone coming out tonight. It's been awesome. And until next time, I will catch y'all later.
Yeah, take it easy. Bye-bye.